All right, guys. Appreciate everybody coming out on a Saturday morning here. Currently, just a little side note, I am sitting in a hotel courtyard, so there may be a little bit of background noise from time to time and one or two planes flying over, but we'll make it work, right? So, real quickly, can everyone see my screen? If you could just type in a quick yes. And also just kind of get a feel for where everybody's at. Where's everybody from? What do you trade? That type of thing. Any and all questions helps me help you while I get set up here. Byron, Illinois. Have not been there. Atlanta, Georgia. Very nice. Singapore, and you trade options. That is awesome. The time zone in Singapore, I'm sure, is a little bit brutal, though, right? Options and futures, Thomasville, North Carolina, Orlando, Boston. So it's midnight right now. That's that's pretty cool. Futures, awesome, Maryland. All right, sounds good. So pretty diverse group. I see a lot of options and mostly futures there. So that's going to work out pretty well. I feel like for everyone here today then. So E-mini S&Ps, San Antonio, Texas, and you want to learn options. All right, well, hey, I'm actually going to be in San Antonio in a couple days, so pretty cool. Dallas, Fort Worth, Texas, starting options, perfect. All right, sounds good. So let's go ahead and jump into this. Like I said, sorry, there's a plane flying over. The conference room was booked apparently, so it is what it is. So one simple trading strategy that I think every trader ought to know. I'm a pretty basic guy, and what I like to do is just pretty much what it says, and let the market tell me what I should do. So Major League Trading is my company with my business partner and trader Jack Gleason, and of course my name is Eric Marcus. So go ahead and jump to this, but a quick risk disclaimer. You guys have all seen this, I'm sure, a couple hundred times. So only risk capital should be used to trade. Futures and options and currency traders have large potential rewards, but they also have large potential risk. You must know these. Hypothetical or simulated performance results have certain limitations, and basically what that means is know what you're getting yourself into before you do it, and know your products, and you should be good to go from there. So what am I going to show you today is some typical trading misconceptions that I see in the marketplace. A simple step-by-step strategy excuse me, that requires no fancy footwork. So if you have a charting platform, which I'm sure you do, then you can do it on your own, on your side. I'm also going to give you some pretty easy to follow rules for this strategy, because just like in everything, there are rules to trading. And if you have Thinkorswim, I can make it even easier and share my grid with you, and you'll be able to actually open up and not have to create the charts on your own. They'll be already ready to go for you. So my road to the market is probably a lot like most people's. I worked as a journeyman electrician, working 6 days a week, and this picture on the bottom left here was a wastewater treatment plant. So for those of you that don't know what that is, this was in DC. When you flush the toilet, that's where everything went. So when I got the bad end of the stick there, it was definitely not what I wanted to be doing. So I live in the DC metropolitan area, so I did electrical work around that area for quite some time, government jobs and things like that, but it was not really cutting it for me and what I wanted to do. So what I did is I studied the market, and I developed my own strategy and indicator that's helped me consistently make money now. As of this month, actually earlier in July, I've been a full-time day trader for the past 5 years, which is why I'm actually on vacation to kind of celebrate that. So with that being said, I've more than likely been the same place at some point in time that you're at right now. Whether that's consistently losing money or struggling to find your niche or your product, any of those different stages of a trader, I've more than likely been there. So in the bottom left here, you can see this is my trading setup. I've since condensed this down to just 2 monitors. I've changed pretty much everything that I trade. I used to trade a lot of stuff, and only end up needing 2 monitors now. This is myself and Warren Buffett, so just a little bit about me. I was able to meet him a couple years ago, flew out to Omaha, and got to spend some time with him and a little lunch and all that stuff. So that was cool. And like I said, I like to travel, so this is me with the Parker Brothers Concepts down in Florida. Got to get a little behind the scenes tour of the shop and take some pictures and stuff like that, which was pretty cool. They're actually working on their new show right now, which should be cool. And then on the right here, you can see this is my wife and I, and again, we're traveling in that picture. So, and real quick, I haven't had time to add this one to the presentation, but I wanted to show you guys this just because it was really cool for me. So this was actually yesterday. So for any of you guys that are on Instagram, this guy is Ferrari collector David Lee, and I ended up, so I'm actually on day like 35 of a road trip right now, and ended up stopping into his shop. He has a watch shop and wanted to pick up a watch, and got a tour of his garage. There's like 12 cars or 14 cars in here, a little over like $30 million worth of cars, so pretty insane. But yeah, anyways, so that's a little bit about me. So let's kind of dive into it, the meat of everything and the reason why you guys came out. So some typical trading misconceptions, I see this one quite a bit, is you can never go broke taking a profit. And for me, I think nothing could be further from the truth, because you have a strategy and you have a setup that, obviously you've done the homework on, and you know that you have this risk to reward ratio and things like that. And if you start taking profits early, then it completely throws off the recipe for that trade. So for me, I don't mind taking a stop. I don't mind losing money if the trade doesn't get the target. So it is a counterintuitive statement, but keep that one in mind and try and let your trades run to target. And people get too focused on taking that small profit, and they never end up catching those bigger trades that have a drastic increase in your account performance. Trading is easy or get rich quick scheme. I see this one quite a bit, and honestly, it's kind of something that got me into the markets. Is that I made money pretty easily early on, or I thought I was making money pretty easily, and that was back when I was 15 years old, trading an account that was in my dad's name. But not really knowing what you're doing and having a little bit of luck on your side doesn't necessarily make it any easier than it really is. A holy grail indicator, so that for me is the search for the next big thing that it's going to take you from level 1 to level 100, and trying to find that one golden strategy and things like that, and just bouncing around from different stuff and bailing out on it the moment it gives you your first or second loss. So for me, that's been a stage that I was at as well. Trade small, trade often. So I'm sure you guys have heard this one. For me, I think nothing can be further from the truth as well. I'd rather have a few well-placed, timed, thought-out trades with a little bit larger size, that I have confidence in the setup and be patient and wait for the setup than I would to, basically take a handful of crap and throw it at the wall and see what sticks. So without a better description available for that one, that's my thoughts on that. And then the other one is news matters. So, and I fell victim to this too as well. Like I said, I've probably been in the same place most of you have been, and I had CNBC on, and they'd bring up a stock, and I'd quickly look at it and be like, oh yeah, this is going to do whatever. At the end of the day, I found that the news honestly does not make a difference. I don't watch CNBC. I don't check earnings. I don't do any of that stuff anymore, and just really have simplified it. What I do is actually take a look and see when the news announcements are coming out so that I am aware of them, but I don't necessarily care what they are, or what the results are from them. So, real quickly, has this happened to you? Have you ever seen the market break lows or highs by just a few ticks and then completely reverse on the day, right? Or were you stopped out of a position at almost the dead lows or highs of the day? So for me personally, when I first started trading, I didn't use hard stops, I used mental stops. And the market would push a little bit, and I'd go, okay, now I'll put my hard stop in. And then it'd come down and take my hard stop out, and then go the direction that I wanted it to. And sometimes by, a rather large margin, which is extremely frustrating. The fact that you just turned a really good potential trade into a loser, and now you're just sitting there kind of shaking your head. All right, so we'll jump back into it. So this is a slide that we were on. So has this happened to you? Looks like I got a couple answers here. So this has happened to me a lot lately. Hard stop, stopped out, and then moved back up. Yeah, the market lately has been rather tricky, but this strategy that I'm going to show you guys today has actually worked really well recently. So anyways, so even if you guys don't want to admit it, it's likely happened to you at some point in time, and that's okay, right? I know it's happened to me. I know it's happened to the other people that I know that trade and that I trade with, and things like that. So it's definitely something that is going to happen to you if it hasn't already. So what I'm going to show you is called the Major League Trading Divergence, and what it's looking to do is kind of pinpoint when that moment in time is that most of those other traders could have been getting stopped out, and are now sitting there shaking their heads. So what that defined as is when one or more of the indices don't confirm the other's movement, right? It's best to use and found on a simple 5-minute candlestick chart. It's all I use it on is simply just a 5-minute candlestick chart. You can take positions in stocks, options, futures, or binary options. So if you like to trade Apple, for instance, I can show you a way that you can trade that based on this. If you like to trade options on the indices, it's great for that. I love trading options on the indices for this. But my two main products are futures and binary options. And currently, those are my go-to. So entry is going to be one tick above or below the signal bar, right? And I'm going to define and show you guys exactly what the signal bar is. So even if you don't have the indicator, you don't have Thinkorswim, you've got E-Trade or whatever charting package that you have, you can still use the same exact strategy. And then just as important as getting into a trade is knowing when to get out. When do you exit? Because you make your money on exit, right? Your exit can be at support and resistance, an opposing divergence, a pivot trail, or simply just the end of the day. This is designed as a day trading strategy, um, and I don't like to hold these positions overnight just because I kind of like to sleep at night. So that's going to be the breakdown. So I'm sure all of you at some point in time have seen a divergence in RSI or MACD and any one of those different types of um, oscillators, if you will. But what I'm going to be looking at is just comparing the four indices themselves. So let's take market A here and market B. Let's call it the S&Ps and the NASDAQ, right? Both have a good run up. They set highs. Both markets start to pull back, right? Up until this point, everything looks normal. If you're a bullish trader, you're probably looking to buy this pullback. If you're a bearish trader, maybe you're looking to sell the top, whatever the case is, right? This looks fairly normal. Where the divergence comes in at is when market A here gets new highs and market B does not. So in the simplest picture form that I can show you guys, this is a divergence. Market A took out those highs and got new highs on the day. It looks like it's going to run, and market B did not. Now, something that's probably in the forefront of your mind is, okay, well, market A took out those highs, so market B is probably going to do the same thing. So why don't I just step in and buy that now and let it run up to new highs? Well, that's exactly the trap of a divergence. And what this is looking to do is a counter trend potential trade. So what I mean by that is I'm looking for potentially, in our previous example of market B, to reverse. So let's go ahead and take a look at a real chart here and see what an actual divergence looks like. So sorry about the kids, guys. We've got S&Ps. This is going to be the same thing all the way across the board for me. We've got S&Ps in the top left. We've got NASDAQ in the top right. In the bottom right, we've got the Dow. In the bottom left, we have the Russell. It's going to be the same thing every single chart I show you guys, same type of pattern there. So what we're looking at here, this white vertical line here is the same time frame on every single chart. And what you'll notice is that at this moment in time, the S&Ps, the Russell, the NASDAQ, and the Dow all make lows at that moment in time, right at about 11:45 Eastern. At just after 2 o'clock right here, 1400, you'll notice that the S&Ps and the Russell get new lows on the day. At the same time, the NASDAQ and the Dow do not. So that's the divergence, right? Market A's getting new lows, market B's not getting new lows. So pretty easy to see in this one, right? It's fairly clean cut. And what happens from that moment that we get that divergence is the market ends up stopping all those people out, right? Especially in the S&Ps and the Dow, or in the S&Ps and the Russell, and then reverses higher and trades back towards the open on the day. So this is about a 15-point reversal in the S&Ps right here from low to high, or about $750 per contract. So pretty decent size move in the S&Ps. So real quickly before we move forward, I just want to make sure that everyone can see where I'm talking about right here at about 2 o'clock when the S&Ps and the Russell end up getting new lows, while at the same time right here the NASDAQ and Dow do not. So just give me a quick yes to make sure you guys can see it. Awesome, perfect. Bunch of yeses there. So that's going to make it really easy for going forward. So give you guys really step-by-step simple instructions for this, right? So step one is you've got to identify the highs and lows of the four indices, right? And the easiest way to do that is simply just mark them. So I went ahead and marked them with blue lines. For me, that just kind of stands out to me. And in this example, this was a couple days prior to the last one. You can see we've got just before 11 o'clock Eastern, we've got our lows and highs set across the board in all indices. And we're just waiting at some point in time for one of those lines to break. Now, that doesn't start to happen until just a little bit after 1 o'clock in the NASDAQ. Now, something I really want to point out here, the NASDAQ's getting these new lows here in this white box for about 2 hours. What's the Russell doing in that 2 hours? The Russell's actually banging right on new highs of the day. Russell's super strong, NASDAQ's super weak on the day, right? Almost the exact opposite looking charts. Ends up setting a divergence. We have 1 break of lows, 2 break of lows, 3 break of lows, 4 breaks of lows. All other indices hold those lows, those prior morning lows from 11 o'clock, and the rest of the markets end up going higher from that moment. So really easy on identifying those. Step 2 is going to be to identify when one market breaks the higher low and the other markets do not. So in the previous example, which was 1 day after this chart, we had the NASDAQ breaking down, right, and getting those new lows. So the day prior, the Russell was actually the weaker one. This is April 25th of this year. You'll notice at just about 11 o'clock, which we're consistently seeing that time frame now a couple of times, right, where we're setting highs and lows potentially for the day at that time. And you'll notice for about 3 hours there, the Russell gets a new low, tries to get a new low right here, does not, tries to get another new low right here at about 3 o'clock, and does not. So it sets its low at about 12:30, which, if you'll notice, at 12:30, S&Ps are putting in a higher low, NASDAQ's putting in a higher low, and the Dow is putting in essentially a higher low flag or base. So, good question, Robert. This is just highs and lows of the trading day starting at the open or at midnight. So, I'm a strictly intraday trader from 9:30 to 4 o'clock. So that's exactly, well, to 4:15 for the futures. That's exactly what these charts are. The Globex data does not necessarily matter to me. Now, step 3, like I said, we found those highs, we found that imbalance or that divergence. So step 3 is going to be how do we get into the trade? So with that being said, entry is going to be 1 tick above or below the signal bar. So if we're taking a look at a simple 5-minute candlestick chart here, no lines, no indicators, no nothing, you'll see the markets are pulling down. We end up setting a low right here. So we're going to use this as our potential divergence. This bar that forms, and once it closes, this is considered your signal bar. The lowest low bar on a 5-minute chart or the highest high bar doesn't make a difference one way or another. Divergence strategies works on the lows and the highs. So your entry is 1 tick above this bar. So as soon as the market moves above as soon as the next bar moves above the signal bar, that's your entry to get long in this example, and vice versa on the downside. Yeah, so really good question, Jeff. You can buy the TF in the previous example, or you can buy any one of the other indices because they're technically stronger, right? They didn't get the new lows, which is the way that I rationalize it and look at it. So let's take a look here at another example, and this is at 1:20 in the afternoon, right, just after lunch, and you can see that the S&P, and this is SPY, Qs, IWM, and Dow. So if you don't have futures data, you can use the ETFs themselves. It doesn't make a difference. You can see right at about 11:30, 11:45, we make lows in the S&Ps right here, and right at about 12 o'clock we make lows in the NASDAQ. In the Dow we make lows right at about 11:45, 12 o'clock. So everything so far is pretty consistent there. What about 1320? The Russell still continues to push for new lows all the way down into 1320. The rest of the markets do not get those new lows. Ends up marking essentially the low of the day in the Russell right here, and we rally from there. Now, something that's interesting on this chart is even though we had the divergence, the S&Ps ended up being weak and coming back down and taking out those new lows before the end of the day. The NASDAQ held them, and the Dow did not hold them. They ended up coming down and taking new lows on the day. So right at the very end of the day, at about 3:30, 3:15, we had another divergence on the day. Now for me, that's personally too late to take a trade based on this. So after about 2:30, 3 o'clock is not a trade that I'm looking to take. So let's take a look at another example here. You can see the main thing here is, again, the Russell. The Russell's getting new lows, or got lows on the day at about 10:05, 10:10, 118.94. And at about 11:40, the Russell gets new lows on the day. The S&Ps, the NASDAQ, and the Dow do not. We end up setting a low, right? This is where everyone gets stopped out from the previous question I asked you guys. If you're trading the Russell right here, you probably got stopped out right here. And there's no shame in that. I've been there, done that, and I'm right there with you. But at the same time, the S&Ps, the NASDAQ, and the Dow did not. We ended up rallying from that point and getting new highs on the day across the board. All right, so a pretty big intraday reversal from that potential divergence down there. Now, just like in everything with life, like I said, there's always rules that come into it. You know that if you go out here and you speed, then a cop's probably going to pull you over. You're going to get a ticket because you broke a rule. So rule number one for me is extremely important, right? And rule number two is obviously not to forget rule number one at the same time. But don't trade the first 15 minutes of the day with this strategy. You want to let the market orders stabilize and just kind of all the overnight action, if it got a gap up or whatever, just there's so much built up anticipation as a trader. Oh, the market's getting ready to open, and boom, the bell rings, and you want to jump in, you want to do whatever. But realistically, it's best just to kind of sit aside and wait for everything to play out. So, quick little example of that you can see here, and this is really minute, so bear with me and kind of keep a close eye here. On the second 5-minute bar in the Russell, right? So if you're really got a keen eye and you're focused on this, right? You can see the Russell gets new lows on the day right here, and then immediately gets new highs on the same 5-minute bar. Same thing in the S&Ps right here, top left corner. Gets new lows on the day, gets new highs on the day. Same 5-minute bar. Dow does not get new lows, but gets new highs. So there's a minor divergence, right? Because the Russell got new lows and Dow didn't. But honestly, it's just not a time frame that you want to be looking at so closely on trying to find that initial entry, right? You need enough time for everything to work its way out. Now, rule number two, just as important as rule number one, they go hand in hand, is wait for the bar break. Now, I'm famous for this, and I'll admit that I break this rule from time to time. And I break this rule from time to time combined with another strategy that I use, or what I call levels. And sometimes it works, sometimes it doesn't. But I know, based on my data, that in the long run it does work for me to, to kind of break this rule. However, if you're using this strategy alone, it doesn't pay to just to break this rule, right? And what I mean by that is when we get runaway markets, you're going to have small divergences that you pick up on. But if you anticipate and jump in early, you're going to get ran over, right? here's an example of that, and I've got a better example as well. You'll notice here on the NASDAQ, I'll wait for the plane for a second. You'll notice here on the NASDAQ, we get new lows right here at 1 o'clock, and the very next bar does not break that high bar. We end up making our way lower on the day from that moment. Okay, and here's an even better example. This one would absolutely hurt. Right at about 12:30 Eastern Time, the S&Ps, the NASDAQ, and the Dow all get new highs on the day. The Russell does not. And it doesn't break this low bar. It doesn't break the low of this bar. And just continues to truck its way higher. So if you did not wait for the bar break and you got into this early, you stopped out. And it still continued to make divergences all the way up into here until the Russell broke to new highs. So you could have tried this 2 or 3 times right here, trying to get a divergence in here without waiting for a bar break, and just continue to hurt yourself. So rule number 2 is extremely important, and it's a really simple rule to follow. So here's another example. Right here at about 2 o'clock, you can see the Russell gets new lows on the day. Nothing else does, but guess what? It triggers an entry. It triggers a bar break. So it's potentially a valid signal to take. So let me know real quickly. I just want to make sure that all of this is still sinking in and that you're understanding the divergence fully and you're spotting them. Yeah, so really good question, Jay. Do you wait for the bar to close or just an intra-bar break? You want to wait for that bar, the signal bar, to close, and the very next excuse me, the very next bar, as soon as it breaks either the high or low, intra-bar, you can take it. But obviously the signal bar has to fully close first. What indicator is that green bar? The green bar is just the chart, just a candlestick chart. There's no indicator on this chart just yet. Here's another example. Right, this one's to the downside. You can see right at about 11:15, the NASDAQ gets new highs on the day. S&Ps, Russell, and Dow do not. So most of them that we've looked at today have been to the upside. This one is actually, in fact, to the downside. But what I did on this one, I pointed that one out, but there's also, in fact, one other potential play on this screen based on the divergence, and my question to you is, where's it at? So I want to see just how good this strategy, and of course my job of explaining it, is actually sinking into you guys, and see if you can find it. $1,400 QQQ. Give me a little better, James. Tell me where at in the QQQ. All right, so something's going on here with this chart. Questions? All right, so QQQ near 1,500, yes. So the NASDAQ does get new highs later on in the day and sets a divergence. But the main one that I wanted to show you guys ends up being down here right at about 10:05, 10:10. Take a look at this. The NASDAQ sets morning lows right in the first 10 minutes. Comes down and retests that. You can see there's a little bit of gap there between the low bar, or the lows there, and that red bar at about 10:10. What happens to the other indices? They all take out their lows. The Dow takes out, gets new lows. Russell takes out, gets new lows. S&P's takes out, gets new lows. So we set a divergence right there. The NASDAQ is the only indice that held the, oops, see if I can go back. Apparently not. So at this moment in time, the NASDAQ is the only indice to hold those new lows or not get new lows on the day right there. Signals an entry, right? Bar break, and rallies up to an opposing divergence. Yes, you can trade NQ on this setup, or you can trade any one of the other instruments or any other indice. It doesn't make a difference there. Now, as I mentioned before, just as important as getting into a trade is knowing when to get out. So step number 4 is going to be the exit. And like I said before, exits can be at support and resistance, an opposing divergence, a pivot trail, or the end of day, right? If you're still in the trade at that point. So let's take a look at this. This is the previous example that I showed you guys, the very first one. So right here at about 2 o'clock, the S&Ps and the Russell get those new lows. The NASDAQ and the Dow do not. We trigger a signal, right? So we've gone through all the steps. We've waited for the highs and lows. We've waited for one of them to break. We've identified the signal bar, and we've now taken an entry into this trade. So when do we get out? So let's take a look at the first one, support and resistance. Exit at support and resistance. This 2056, 2057, right here in the S&Ps. Let's say we took the S&Ps. That's a good looking spot, right? We've kind of stopped there before. That's the last pivot that led us lower. So maybe that's a good area to get out at, right? At previous support and resistance. Could be an opposing divergence, right? Let's take a look at this. The Dow ends up rallying up, gets new highs on the day right here, just into the end of the day. So if you're still holding on to this position, the Dow gets new highs on the day, nothing else does. That's an opposing divergence, right? We can get out there. If nothing else, we can pivot trail it, right? So pivot trail is just, you know, we've got our entry here. We rally up, we pull back, we rally up, we pull back. So we're just constantly trailing our stops up, rally up, pull back, rally up, pull back, and constantly trailing our stops up based on the pivots on the chart. Or if for whatever reason none of those three work and we're still in the trade at the end of the day, just go ahead and close it out. It's literally as basic and as simple as I can make the strategy with step-by-step examples to show you guys. So step 1 through step 4, and 2 rules to follow with the strategy. So here's what to remember, and this part is important. So wait patiently for a divergence play to set up. Like I said, I'd rather take a few good trades with larger size that I waited patiently for than to, you know, just throw a bunch of stuff at the wall and see what sticks. Enter on the break of a 5-minute signal bar. Exit at support and resistance, a pivot break, an opposing divergence, or at the end of the day. The key to this strategy is patience and consistency and just letting the strategy play out. There's a reason why computers can make better traders than humans, is because they have defined rules that tells them what to do. And they don't get emotions and say, okay, hey, you know, this looks like I should close it out here because of this, this, and this, or whatever the case is. And that's exactly how you need to be as a trader. Emotionless when it comes to trading. And yeah, the trade went in your favor. Now it's back to break even. Doesn't make a difference. Let the strategy play out. So I've been using this strategy for quite some time, right? And like I said, I've been full-time as of this month for 5 years. And we just started MLT last year and kind of sharing, everything that we know and trying to shorten the learning curve for everybody. But at the end of the day, technology can be a lifesaver. So I did this for a couple of years without ever having anything to help me. So what I did is I had a proprietary indicator built with the divergence in mind and a little bit of secret ingredient or secret sauce, if you will. It identifies potential highs and lows for the day with a simple arrow. So if for whatever reason you weren't seeing the divergences before on the chart, it's going to make it really easy for you to see them right now. Clear-cut, definable rules for entries and stop losses, right? It's the same strategy, just a little bit easier to identify them. And it also allows for an even bigger basket of products to trade. And at this point, I've been using this indicator now for a little over 3 years, I think, at this point. I worked with a Russian programmer to make it happen and kind of make my life a little bit easier. So I'll show you exactly what that looks like. And as simple as I said, a red or green arrow is exactly what it is. So if we take a look at the S&Ps here, now remember, rule number one is we're ignoring the first 15 minutes of the day. So since these screenshots have actually had the code reworked, and it won't even show you any arrows in the first 15 minutes of the day. But from that point, you can see we've got a divergence right here, 1 bar, 2 bar in the S&Ps, ends up triggering, takes us lower. We get a new signal, doesn't trigger, right? We end up getting another new signal right down here. You can see a little bit of the green arrow. That triggers, takes us higher, right? Got another signal here in the NASDAQ, one right here. A couple signals here in the Dow. So visually trying to identify those divergences just got a whole lot simpler. Now, taking a look at this, right? Give me 1 second. The trade that I took in this, right, so was a futures trade to the long side. On the left chart, on the left side here, you can see this is my dome for a NinjaTrader platform. This is a real live money account. I took one contract to the long side. It worked out to $412.50. Right, I took the signal from the low. I didn't take the short. I took the second signal in the S&Ps from the low. At the same time, I paired that up with some SPY calls. In this example, it was the 197.50s. I took a little bit larger size in those, and that paid $1,614. So I used futures and calls in the SPY, to facilitate this trade. This was back in March of this year, so fairly recent times, and I've had trades in this actually since I've been going on this trip as well that I can show you. Now, the next trade here, so that was a trade to the long side. The next trade here is to the short side, and what you'll notice is right at about 1 o'clock, the S&Ps get new highs on the day with a signal. Notice that the NASDAQ does not get new highs on the day. All right, we don't get new highs on the day in NASDAQ. That's a picture-perfect setup for me. This doesn't get any better. One thing I want to point out before I move to the next slide, though, the S&Ps never get new lows on the day. The Russell never gets new lows on the day, and the Dow never gets new lows on the day. But the NASDAQ does. So according to steps, we've got a potential exit strategy, right, and opposing divergence. So what did I do in this trade? Well, I took it to the short side. One contract in the S&Ps. I shorted the futures. That worked out for $572.50 on a one contract trade. And I tried to pair it up really evenly with some SPY 201 puts. So this was just 5 days later from the previous trade that I showed you to the long side. So these two trades right here alone were good for a little over $3,000. right? $2,000 on the first one and a little over $1,000 on this one. Trading one contract in the S&Ps and pairing that up with some SPY puts. So literally as simple and easy of a strategy that I can make it. Easy to understand, I should say. So, any quick questions, or does it all kind of sink in and make sense? Very clear. Awesome. That was my goal for today, was to make it as clear as possible. How long is a trade? I mean, the trades are intraday. So the trade could be 10 minutes if it stops you out. It could be 3 hours if it just goes all day. So it's a really good question, Robert. If you continue to make new lows, do you chase the entry? If we continue to make new lows and we're signaling we're breaking the next 5-minute bar or the previous 5-minute bar every single time, after 3 times of doing that, I just stop. If I take 3 stop outs in a row on a single day, I stop trading. Can this be used on daily charts? It's not as good on daily charts. It can be, but the signals are going to be less. I only use the arrows are only meant to be used on a 5-minute chart, but the overall strategy can be used on a daily chart. It just takes a lot longer. The stops are a lot wider, waiting for triggers and things like that. So honestly, I can't give you an answer of what the data proves, just because I don't swing trade. Please explain again what causes the signal in the chart. The signal in the charts are caused from a divergence between one indice and another indices. So one market's breaking new highs or new lows, and one of the other markets is not. Do I average down? Absolutely not. Do I use out-of-the-money weekly options for your options trade? No, I don't use out of the money. I typically go at the money or just slightly in the money. So I usually go one tick or one strike in the money, and sometimes 2, depending on kind of what the market is and the price and volatility and things like that. But never out of the money. Do you use a set stop or always go beneath support? So the stops are given to you on that 1 bar entry. The stop is just below that low. So if the signal bar is broken to the high or the low side, your stop is just the low or high of that bar. Yeah, no worries, James. How to protect against HFTs. I don't really worry about HFTs. It's one of those things that, in the beginning of the presentation, I gave the typical trading misconceptions that people probably think about, and at the end of the day, it doesn't really matter. All that matters is that you have some proven strategies and setups that work, and you execute them, and you don't worry about outside noise, in my opinion. So, moving on, what I've done is I've put all this information together with some video content explaining different types of setups, whether it's a 1v3 or 2v2, things like that, and package that with the divergence indicator itself, the visual indicator. Now I gave you everything today that you guys can start using this on Monday on your own, right? You can set up the 4 charts, the little grid layout. If you have TOS, you can get it from us. But if you want the indicator itself, the simple red and green arrows, here's what I've done for you guys. So trade your favorite product and instrument with a proven setup. Clearly defined trading rules to keep you from chasing. Pre-built trade grids and TOS, which is awesome. You can load them right on your screen. take the guesswork out of trading and let the setups just kind of occur. And you also get, pretty much 5 years of my real world experience with this indicator and strategy. I've been through and seen almost anything you can think of with this indicator and strategy during that time frame. And we give you lifetime access to, pretty much all of this content and everything that we do. So the MLT divergence indicator is a $999 value. I just showed you 2 trades, trading 1 contract, the smallest size you can trade in futures, and that was good for $3,000 in 2 trades. The divergence indicator course itself is a $499 value. In that, I take you through step by step each strategy and a little bit more in depth of which one you shouldn't take or which ones are better, how to avoid certain pitfalls, right? How to not get those stop outs at the lows and things like that, kind of waiting for something to prove itself. Those pre-built trade grids can save you a ton of time, and time is money. That's a $200 value. And then lifetime access to the code, right? It's something that you're going to continually be able to have and come back to over and over and over again, as long as you have it, right? So easily worth its weight in gold, right? So a total value price on this, right? I showed you 2 trades, over $3,000 in profit. Total value of over $3,197. Today, we've got it at, whoop, that didn't work for me. Today, we've got it at mltclass.com for $147. So 3 S&P points for all of this content and all of this information. Have the indicators been applied after the retracement, not before? So are they telling the user what has already happened, which can be seen by the price action reversal? The indicators are real time. So when a market makes a new low and it triggers the setup, the indicator plots. Do we have it for mobile? No. To work those figures out, I'm getting it. Awesome. So whether you do buy or don't buy, what do you do next? And what I want you guys to take away from today is, if you do buy, obviously load the divergence indicator on your own computer, right? You get exactly what you see on my screen today on yours. Review the introductory video series. If you don't buy, re-watch the recording of this. Take a look at your notes, anything like that. Memorize the trade setups. Like I said before, there's 1v3s, there's 2v2s, there's 3v1s, there's combo days. So a lot of good setups, right, that I didn't get enough time to really dive into with you guys today. And then if you're on Thinkorswim, right, just pull up this grid and start reviewing. You got 20 days worth of 5-minute charts that you can go back and start looking and seeing, where potential divergences happen and things like that. And then obviously just prepare for the next trading day. The next trading day is Monday, so plenty of time over the weekend to get that cracking. It does not work on TradeStation. Sorry, it only works on Thinkorswim. That's the only charting package that I use, and it's free. So if you don't have it, I encourage everyone to have it just as a backup for whatever means. And I think it's obviously free, so I think the charting package is awesome. So is the indicator tracking all 4 indices, and you can only trade indices? It is tracking the indices, but let's say that the NASDAQ gives a signal. You can trade that with Apple, Amazon, Google, things like that. So I didn't get a chance to dive into all that today, like I said, but there is some versatility before that. Can this indicator be applied to the tick charts? No. I only use this on a 5-minute chart. Oh, that must be an error, Jahan. Sorry about that. Yeah, it is only 147. We don't have a mobile version. I could look into that, but we don't have one currently. So, once again, guys, that's mltclass.com. unbiased.com is the link for that. It is only for Thinkorswim. But like I said, Thinkorswim is a free download and a free charting platform. So yeah, so I'm not quite sure why that says that, John, but it is only 147. It's probably just an error on our side of building the page out. You get an invoice as soon as you purchase, which shows you the confirmation. So, like I said, it's just a typing error down there. If the mobile and or trade station do come out, we receive those at no added cost. Yeah, absolutely. Yeah, so I try and send out every other week or so. I make a quick video and outline kind of some of the strategies that had set up during the week and send those out to all the people that that have purchased the course. So I'm considering adding content to it as well on top of the videos that are already there. So what it does is it just tells you that it's there. So you just have that 4-grid chart up, and the arrow pops up. You can have it audio and things like that. I turned all the audios off just because I don't like a bunch of noise going on during the day. But yeah, it'll give you an audio alert if you wanted it to. Yes, it only works on toss. Yes, all indices have to be up. It's a simple 4-grid chart, so it's literally one window that you can have up. No, Michelle, it's separate from the MLT basic course. But I appreciate you coming out today. It's awesome. Why am I giving a $3,050 discount? John, if you would like to pay $3,100, feel free to let me know and I'll send you an invoice. Will I get help to load if there's any difficulties? Yeah, you can always send us an email. But like I said, there's a video on the back end that I'm showing you exactly how to take the code and load it right into your own computer. Thinkorswim has this great sharing feature that works really well for that, and we use it pretty much every day. So yeah, it's really easy to use and a great feature that I'm glad they added. That's funny. Yeah, we have a trading room. So yeah, either myself or like I said, my trading partner Jack Gleason, we run the room on a daily basis. This week was really slow. I didn't even trade yesterday, so I was looking for a couple of things to happen, and they just didn't happen. So I'm out in California at the moment, and the time zone here is awesome because by 9 or 10 o'clock in the morning, right about now, the market is it's noon to 1 o'clock, so the morning session's over, which I usually don't like to trade after noon or 1 o'clock anyway when I'm on the East Coast. And can go ahead and get the day started, which is actually what I'm going to be doing today. We're working our way down to San Diego and then maybe over to Catalina Island and some stuff like that. So I really like the time zone out here. So I mostly call only indices. For me, like I said, I've simplified my trading and I only have 2 screens now. So, and while I'm traveling, I only have 1. But, I've found simplistic is better in the sense that, if you can't trade one product, then you probably can't trade more than one. Sorry, I guess they're. I guess today is weed eating day and everything else they got going on here. Um, how much is the room? So the room is $99 a month, or it comes with some of our other packages for extended time frames. Yeah, the room can be pulled on mobile. We use it for we use GoToWebinar, so same exact platform as this, and we have a chat room embedded on our in the members area of our site. Um, Jack's growing a little bit more accustomed to the divergence indicator. He's actually worked on and built some of his own kind of indicator bundle over the past few months from the way that he trades. So, not every trader trades the exact same way. But yeah, he's definitely, I'll point them out to him when I see them, and obviously to the room as well. Yeah, yeah, absolutely, John. You can just simply email us. We're pretty responsive to emails. If we don't get back, typically within like 15 to 30 minutes, usually within like 3 to 4 hours. Um, but yeah, we're really responsive to emails and text and things like that. Yeah, we have a trial for the room, just from the site. You can see it's $7 for 14 days. So, all right, guys. Well, I appreciate, like I said, everyone coming out on a Saturday, and we had a little bit of trouble, but got through it. And hopefully, you guys managed to take something away. Does this work on toss? Only works on toss, yes. The site address, so I can go ahead and type that in here. MajorLeagueTrading.com. That's the actual website. MLTclass.com is just the special link for today. Don't forget to send them the invoice. Appreciate that, Bill. Thank you, Eric. Very good webinar. Thank you, Eric. I know I make money from the strategy. Awesome. All right, Michelle. Well, if you have the basic course, I'll see you in the trading room. And everyone else, thanks for coming out. I'll turn it back over now.